So cloud computing was really just been really disappointing compared to the US counterparts, which are, double digits. Hi everyone, JJ here. Welcome. Well, today I've got a summary and edit of the recent live stream I did of Alibaba earnings, including the earnings call. So let's get straight into it. We delivered a solid quarter. Our top priority is to reignite the growth of our core businesses, e-commerce and cloud. That's been a real disappointment for shareholders. We will step up our investment to improve users' core experience to drive growth in Taobao and Tmall and strengthen market leadership in the coming year. We will also focus our resources on developing public cloud products, sustaining the strong growth momentum in international commerce business. The international sector was growing pretty strongly, really strongly. It's one of the good areas. Alibaba Group delivered a healthy quarter with revenue growth of 5% year on year. Our board of directors approved an increase of 25 billion. That's what's made headlines. The main headline is their buyback 25 billion to our share repurchase program. While the shares are cheap by all accounts, demonstrating our confidence in the outlook of our business and cash flow. Our consistent share repurchase has also reduced outstanding share count while achieving EPS and cash flow per share accretion, said Toby Zhu, Chief Financial Officer of Alibaba Group. Business highlights. $36,669 million US, an increase of 5% year on year. I think the market's being a bit disappointed by that 5%. Income from operations was a decrease of 36% year on year. The year on year decrease was primarily attributable to impairment of intangible assets of Sun Art and impairment of goodwill of Youku. So Youku's like a Chinese YouTube. Growth of 3% year on year for cloud. Taobao and Tmall, which is this is the real profit driver here. Growth of 2% year on year. During the quarter, our GMV achieved healthy growth year on year. Cloud Intelligence Group, growth of 3% year on year. We continue to improve revenue quality by reducing the revenue from low margin projects. Alibaba International Digital Commerce grew 44% year on year, and the combined orders grew 24% year on year. So the international group's growing pretty well. The strong performance in international was driven by solid growth across the AIDC's retail platforms, especially from cross-border AliExpress. Bought something from AliExpress for my son. Bought this giant mouse pad and it came through there, and he was happy with it. It came pretty quickly. No complaints. Our cross-border businesses exhibited a rapid year-on-year growth in response to increasing global demand for high-quality products at attractive prices. So during the quarter, AliExpress delivered over 60% year-on-year order growth. Well, that's impressive. 60%. Is that because of the pandemic? We'd have to dive into the numbers to see that. Everything was shut down, as you remember, but that was a while ago now. Choice represented about half of AliExpress's total orders in January 2024 and continues to deliver rapid order growth. So that's impressive growth in their international AliExpress. So that's the bright spot. During the quarter, Trendyol continued its robust digital order growth while maintaining its leading e-commerce position in Turkey. Trendyol has further extended its operations to the Middle East with a wide range of merchandise as well as speedy and reliable logistics. Lazada continues its focus on optimizing its operating efficiency. Xiniao Smart Logistics, they're the one going to spin that off. That was the planned spin-off. So what do they say about that? For the quarter ended 31st of December 2023, revenue from Xiniao grew 24%. That's another good growth into the 20s there. Really bright spot. And this is really one of the first spin-offs that they want to do. Is it a good idea to spin that off? Is it? Should they spin that off at all? I don't know. It's debatable. What do you think about that? Xiniao continues to execute its strategy of building a global smart logistics network, reinforcing comprehensive end-to-end capabilities in the first mile pickup, sortation, and last mile delivery. Xiniao further expanded its premium 5-day delivery service coverage, adding to more countries during the quarter. The order volume for the premium 5-day service achieved robust triple-digit. Local services 13% year-on-year growth. Digital media and entertainment 18% year-on-year growth, driven by strong revenue growth of offline entertainment. It's under $1 billion we're getting to now. Upsize of share purchase program. Here we go. This is going to be the main headline. As previously announced during the quarter, repurchased a total of 292.7 million ordinary shares for a total of $2.9 billion. Okay, that's not huge. That's not huge. It could do more for a total of $9.5 billion for the calendar year. Share repurchase program resulted in a net reduction of 3.3% in our outstanding shares. Board of Directors approved an increase of $25 billion to our share repurchase program through to the end of March 2027. Well, that's a long way out. I mean, look at the share price. Just let's look at this for a second. Look at that. So, I mean, why would you not buy back shares at this point? They've got a lot of cash, and we'll see that. They've had a lot of cash. Look at that. It's just over the maximum. It's down 16%. Over 5 years, it's down 53%. Why would you not buy back a lot of shares? Now, if you're getting value out of this episode so far, I really appreciate it if you hit that like button to help the algorithm to spread it to more people, because that's what we want. Thanks. Let's have a look at the deck. Financial highlights. So we can see the growth here. So Taobao 2%, Cloud Intelligence Group 3%. I mean, it's disappointing, the growth there. 44% for International Digital Group. That's a real bright spot. 44% growth. That's more like it. Inside now is Logistics 24%, as we've seen. Local Services Group, these are smaller now, 13 and 18%. So those big ones, Taobao and Tmall, the e-commerce, China e-commerce mainly, it's 2% growth. So 2 and 3% for Cloud and Taobao and Tmall. It's hard to say how that's going to make the market happy. I mean, honestly, I think if those were growing as strong as these other ones, the stock would likely go up. So that's pretty low growth, low single digits. So total segment revenue 6% year on year, consolidated revenue 5%, income from operations, cash and cash equivalents. Here we are. See how much cash have they got? $35.8 billion. They've put on a $25 billion possible share repurchase, but that's until 2027. They can so easily do this. What would Warren Buffett do if Berkshire Hathaway was gone down more than 50%? They have launched a big program, but from my point of view, maybe they could buy back more. Get stuck into it, mate, as we say in this part of the world. So short-term investments 42 and treasury investments 13. So 91 billion US dollars. I mean, what's the market cap? Market cap of 199. Big chunk of their market cap is in cash, the cash balance. So I just wonder if the government doesn't like it because it's sort of enriching shareholders, but nobody's ever said that. So net cash position 68. So that's less current and non-current bank borrowings and non-current unsecured senior notes, of course. So net cash position 68. Segment results. Here we go. We know what's disappointing and what's not. The two big sectors, the cloud sector and China e-commerce, Taobao and Tmall. Fairly disappointing growth, to be honest, really. And for 44% for digital, for Alibaba International Digital Commerce, 44%. So 24% for logistics. So that's the breakdown. Taobao and Tmall, not great growth. And Cloud Intelligence, not great growth. International segment growing really strongly. Logistics growing strongly. Local Services Group, but there's kind of more insignificant in terms of revenue. 19%, 20% growth in digital entertainment media means insignificant in terms of the revenues there. When you look at the revenue for Taobao and Tmall, that's the highest, the most important segment remains so high. Where did you get this pack from, please? So it's the investor relations section of the Alibaba website. You could just Google that, you'll come up with it. So this is the screen here where they have the quarterly results and the financial report. So you can grab the deck there, have a look through that deck yourself. Definitely have a look at that.
Over this past quarter, we delivered steady growth while making organizational adjustments that align with our strategic focus. At the same time, we took a deep look at our core business operations and the competitive landscape. We concluded that to maintain our competitive edge, we must increase our investment in core capabilities and adopt a more aggressive approach towards competition in order to win growth. Our top priority is to reignite the growth of our two core businesses, e-commerce and cloud computing.
Yeah.
In cloud computing, we're committed to our strategy of prioritizing public cloud. We have proactively optimized our business structure, reduced revenue from project-based contracts, and increased investment in public cloud products. These structural adjustments are showing results. By improving our customer coverage and service capabilities, we will enhance our growth rate. In the international commerce business, we focused on expanding cross-border offerings and enhancing the shopping. This quarter, all of AIDC's retail platforms achieved growth, resulting in international digital commerce overall revenues growing at a rapid rate of 44% year over year. Cainiao continued to develop its global smart logistics network with cross-border logistics fulfillment solutions contributing to 24% year-over-year revenue growth. as well as realizing strong synergies with the cross-border e-commerce business. Today, Taobao and Tmall remain the most valuable shopping platforms and the main place for merchants to do business.
Yep, they're big.
With the comprehensive capability building plan for 2024, we're confident that TTG will return to growth. Despite the uncertain international environment and more intense market competition, AIDC achieved rapid growth. Total orders grew by 24% year-on-year, driven by strong growth across all major retail platforms. Growth in our cross-border business was especially significant. As of January 2024, Choice already made up half of all AliExpress orders. Its high-quality user experience has driven significant user growth. We're also actively deploying AI to enhance operating efficiency and lower barriers
I
for
had to
merchants.
mention it.
Our suite of AI-based digital foreign trade products have been officially launched, enabling real-time language translation, AI logistics services, rapid generation of images. And Alibaba.com completed its acquisition of the well-known European B2B digital trade platform Visible, further expanding
in Europe for sure,
and further advancing
Alibaba.com's
global expansion and dual brands. There is huge potential for AIDC to increase user penetration in the majority of overseas markets. Building on our current resources and footprint, we will increase our investment in select regional markets where we see opportunities and value to achieve opportunities for high certainty and healthy growth.
They really played up the international part because there's strong growth there.
As of December 31st, 2023, we continue to maintain a strong net cash position.
Tons of cash.
We observed a few positive trends. The number of operating merchants on our platform continued to grow at double digits, and this trend has sustained over the past 4 quarters. Revenue from Cloud Intelligence Group, an increase of 3%.
And compared to the US, like in the 20s.
The enhanced profitability of cloud business gives us confidence to invest in technology and customers to strengthen our public cloud leadership in the future. Alibaba International Digital Commerce Group, an increase of 44%. Revenue from international commerce retail business increased by 56%. The increase in revenue was primarily due to solid revenue growth from AliExpress, especially Choice business. In the coming quarters, as a strategic partner of AliExpress, we will increase investments in expanding our cross-border logistics capabilities to support AE Choice's growth. Revenue from our DME group was RMB 5 billion, an increase of 18%, primarily driven by the strong revenue growth of offline entertainment businesses. Revenue from all others increased 7% to RMB 47 billion, mainly due to the decrease in revenue from Sunart. Lastly, we remain committed to returning cash to shareholders, paying back shares. In the 12 months ended December 31st, 2023, we have repurchased $9.5 billion, used the share count by 3.3%. Our board of directors has approved the upsize of the share repurchase program by another $25 billion through March 2027.
25 billion.
Upsizing our share repurchase program. Following the upsize, we currently have $35.3 billion available in our share repurchase program. The upsize program, we target to achieve at least 3% in annual reduction in total shares outstanding for the next 3 fiscal years.
That's good. So summary there, talked a lot about the buybacks. It's really the main thing. Growth's not great in some areas, it's good in others. Analysts sort of pushing for greater buybacks. I kind of agree. I do agree if they could do buybacks while the stock's this low. Makes sense to buy back now. It could go down more, of course. Those are my thoughts anyway. Growth of cloud and Taobao and Tmall. They talked about efficiency and investing. Obviously, the international's going well. They're investing in Europe and other parts of the world. So it's not bad. The fundamentals are good. They've got so much cash. Just giving it back to shareholders. I think buybacks are the best way to do that rather than a dividend. I don't want a dividend. I'd rather they invest it in themselves while the prices are low and increase the value. It was a mega cap. This was a massive mega cap company, and so it's just a fraction of the market cap it was. So if you compare them to US companies, $1 trillion companies, of course there are reasons for that, arguments for that. Thanks for hanging out with me here and going through this. I really appreciate it, and it's great to see lots of people here. I've just started this live streaming, so I enjoyed it, and thanks for all the comments, everybody. That was great. Let's see what happens in the market, see if it actually makes a comeback. Now, if you don't know yet, I've started the Art of Value Patreon. Over there, I'm providing exclusive content, ad-free videos, and extra posts just for the price of a cup of coffee per month. I'm going to put a link in the description if you want to go and check that out, and hopefully see you over there. Now, if you're watching this video on YouTube, above our cat here, Shadow, I'm going to put a link to a video of what the YouTube algorithm thinks that you in particular should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.